Welcome to the latest episode of the Target Practice Podcast with Charlie Jewett and Bobby Alford. This show is for insurance agents who are ready to earn more target premium by growing their practices. In addition, Charlie and Bobby will share strategies on how you can elevate your business and provide an exceptional customer experience. Now here are your hosts, Charlie and Bobby.
Welcome back to the Target Practice Podcast. My name is Bobby Alford. This is Charlie Jewett. This is episode number 9, The Art of Comparison, How to Sell Insurance Products. So this is how we have found success in the insurance world, and it is through the art of comparison. Charlie's going to walk through some of his, past and evolution of this process, but we are in a very unique industry. This is one of the only industries where you can be paid incredibly well, do amazing for your clients, and not charge them anything out of pocket. It's simply a comparison process that we have refined with Charlie's guidance, and I can't wait for you to hear about it. All right, Charlie, kick us off.
I think, there's probably a ton of different ways to sell. There's many, many successful people out there, so I'm only qualified to talk about the one that I am aware of, the one that I know. So really, I'm trying to teach one way you can get results, because anytime you're running a company or attempting to earn money or help people, whatever the motivation is, there's obviously in any business, well, I guess you could be retired and bored and not need the money and be an insurance agent, but most of us are trying to build something and feed our families and make money, doing good. There's a lot of different ways to do that. I'm just going to share what's worked for me. I had an incredible rookie year in 2005. I made over $400,000 when I was just brand new. Obviously, I'm better at the craft now. You get better over 18 years, but making really respectable money your first year, something's going right. I was taught very well by Douglas Andrews back in the day and other people. So I just want to share with our audience, what works, because I don't think you have to sell in this industry. No one really wants a salesperson anyway. We talked about it on the episode about drip campaigns and funnels. Is people want, when they want information, they want it without a salesperson. They want to get themselves comfortable. And then, for instance, like when I buy cars, I hate the process of buying cars. It's just miserable, right? So I kind of do everything and then walk on the lot. And I'm like, can I have this in less than an hour and a half and without talking to 9 people in suits or not? You know what I mean? Should I just buy online? Like, get out of my face, stupid. I don't want the salesperson. Salespeople have destroyed their reputation. We hate them, right? Thankfully, in this industry, you don't need to be a salesperson. You need to be, what I think works is to be that friend in the industry. Have a feeling about you that's like, it's like you had a family member that happened to also be in the wig industry, and you've got a wig question. You know what I mean? Like, wait a minute, what are these things made of? Horsehair? Human hair? Cadaver? Like, you just want to ask a question of somebody you can trust. Even though they don't know you, if you act like that and see yourself as that, I've found that to work. So why do we say it's the art of comparison and not sales? Go back to before I was an insurance agent, I was in the mortgage industry. Well, mortgage industry is very easy to see. You have a mortgage. Rates go up or down, right? And when rates go down, they call it a refinance, a cash out refinance or a rate and term refinance. When rates go from 5 to 3.5, you can replace your old loan with a new loan and pretend there's no costs. There are loan options that don't have costs, but ignore the closing costs for a moment because we don't have those in this industry. It's just, what do you want? The old loan with the high payment or a new loan with the lower payment? You want to pay more interest over 30 years or less? And that decision of which one to have is very easy, right? In the financial services, the analogy I like to use is, imagine you went to, there's homemakers, it doesn't matter if it's a woman or a man, you go and you say, would you like to have a brand new kitchen with all the top of the line appliances, the marble countertops? Would you like to have the best of the best of the best, or the kitchen you have if it didn't cost you a penny? In other words, would you like me to remodel your kitchen and bring it up to speed, make it beautiful, and not charge you a penny? A lot of people would say yes. Maybe not everybody, but many, enough to, like if someone paid you to do free kitchen remodels, you'd get enough clients to say yes, right? Bobby, we're in that industry. We're literally in the financial makeover, the financial renovation, the giving people the latest and greatest, most up to date. Let me review what you have, and if it's not perfect, replace it at no cost, moving from inferior to superior. Holy cow, what could be easier to sell? But you don't even have to sell it. You just have to help this person, help this couple, help this person, help this family see two things. Here's the key, two things. Here's what you have. Here's what you could have. Mortgage, right. You have 5% and this high payment, and over these 30 years pay this much interest. You could have low interest, this low payment, and pay this much interest over 30 years. And by the way, with the savings every month, you could go have a Tesla or whatever. I mean, there's ways to allow them to see the benefits, right? Same thing here. I mean, at no cost to somebody, you could retire them 10 years earlier. At no cost to somebody, you could retire them with 30% more income. At no cost to somebody, you could give them the same income and not have any taxes due from the day they retired to the day they die, unless tax law changed. So the art of comparison, in my opinion, how do you sell insurance products? Now, I'm focused heavily on annuities and cash value life insurance that are designed for income, retirement solutions with insurance products. It's not the only license I carry. I have the license to manage money. It's just stocks, bonds, and mutual funds are a terrible solution for planning for anything. They're one of the ways you can gamble with leftover money. You have in-case accounts, income accounts, so emergency fund and paychecks, income accounts. What's retirement about? Income. Hello. So you got to solve for the income. Then you have less left over for increase accounts. Yeah, you could do stocks, bonds, and mutual funds with that, but they're a terrible solution for planning for anything because you can't plan on what you're going to earn, what your account balance is going to be, or what income you can take, right? So yes, I'm heavily focused on annuities and life insurance for retirement solutions, but let's just pretend traditional life insurance. Let's say you're just selling death benefit. Like if you die, your family needs to get a chunk of money. Why does that exist? What's it for? It's for income replacement. Like all of this is about income. Death benefit life insurance is about income replacement while you're young and working. The rest of the solutions are about income after you stop working and don't have an income. Like it's always about income, right? So let's say you meet a family and it's a one income family or a lopsided income. They're not each making exactly the same salary. It's common for one to be making more than the other. And you say to the one, making less money or no money, if your spouse or partner passes away, would you still like to have income? You say it in front of the other one. or you ask the one that has the income and you ask them, would you like them to have income? And then you just turn and look at the one that won't have the income and see what happens. So even in that scenario where we're not talking about retirement planning or investment grade, blah, 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 it's still comparison because it's like this. Here's what you have. If you passed away, you're making $150,000 a year. If you passed away, this beautiful person, this partner of yours, the income and the kids, the income would go to zero. That's what you have. You could have, if you passed away, this person gets 20 years of $150,000 a year of income, or this person gets $150,000 a year of income forever. You would do that by dividing 150,000 by 0.05, by 5%. And solving for the chunk that would kick off a 5% income from an income plan for, you're either solving for 20 years of income or some chunk that gives you income into perpetuity, right?
Right.
You're just saying, here's what you have, here's what you could have. Now, in the traditional sale, without anything else, there will be a cost. You got to pay whatever, for the insurance. But if you bring it into our world, then you add, and by the way, if I look at your total picture, I will find a way to get you that death benefit coverage and keep you budget neutral anyway. That's the entire skill.
So maybe walking through what our process looks like. Now, this applies to if you want to do home equity protection, if you want to do terms. So those are all very small income replacement, and they are, final expense, all those things. They're just lumps of money that are going to help you get through XYZ scenario. And a lot of those are commodities. So in those worlds, maybe you have a more aggressive sale or whatever your process is. That's you and your process. For our process, the art of comparison comes down to someone comes into our life, usually finding the content that we create or through referrals from happy clients. They come into our life and they say, here's what I have. And then we say, great, let us do an analysis. Let us work through your financial picture and say, apples to apples, here's where you are, here's where you could be, and we try to keep it budget neutral, right? Yeah. So here's where, using the 5 lives of retirement, That's what Charlie has created, and we use to test all of our plans. What happens to you and your spouse if you have a long life, rough life, short life, sick life, or you graduate to the next life? Can your investments be subpar in those events? Can you outlive your money? What happens if you don't get ill, like long-term care ill, but you hurt your leg and you can't work for a bit? Or you need liquidity access, or if you're like my family who doesn't live all that long, maybe you graduate very early, and so what happens to your heirs? So that process is how we test our plans, and we simply say, if all your money's in a 401k, what happens if you get injured, or what happens if your spouse needs long-term care coverage? How are you going to cover that? Here are some loopholes, and not loopholes. Here are some holes in your plan that you can fix without any cost. And we just shine a light on it. We don't hit it with a hammer. We just shine a flashlight on it and say, hey, would you like to fix this or ignore it? And kind of work through that comparison process.
Exactly. What would you like me to do? Here's what I'm seeing. Here's what I would do. It's your life. It's your money. What would you like? Would you like me to fix it or ignore it? Is a powerful question. And what's interesting is it'll never change that as an advisor, as an insurance agent, you think 100% of the people should say yes. They should say, well, in one sense. They shouldn't say yes because they don't. That's reality. Like if flour is yellow, it should be yellow. How do we know? Because it's yellow, right? But the numbers, I believe, are accurate no matter who you are in the industry. You're probably going to get 3 or 4 out of 10 people to move forward because it's this crazy combination of you have the right solution. They actually like you. They feel comfortable. It's the right time. They're not fighting between them. This is just, there's so many stars that need to align for people to say yes. You're not going to have a 100% closing ratio, but that's the game. That's the funnel. At some point, all of these leads become 10 appointments or 10 conversations, and 2, 3, 4 pop out at the bottom. It's the other reason you want to learn how to make $10,000, $20,000, $30,000 per client by being comprehensive, because if you only get 1 or 2 out the bottom, all marketing works. Even if you're paying $12,000 to put butts in seats, if you make 30, the numbers are good enough to, how many times would you like to do that? Every night. You know what I mean? Like that's kind of the way marketing works. So I like language. So you mentioned long life, short life, rough life, sick life, and into the next life, which is the language that I created to stress test the plan they have and then to stress test the plan that we're giving them. I mentioned in case accounts, income accounts, increase accounts, to the language that we use to help them know you need 3 types of money and you have them while you're working. When you stop working, only one goes away. Your emergency fund doesn't disappear when you retire. Your retirement accounts don't go away. Your increase accounts, your paycheck, your steady income disappears. On Friday, if you're making $100,000, on Monday, you need to be making $100,000. Retirement planning has always been about income, and stocks, bonds, and mutual funds fail miserably for planning for income. So the person must have what you sell. They need, if they're seeing clearly, they must purchase income. Listen, this is a totally different topic, but it's income. Buying income in retirement is not about investment qualities. It's not about rate of return. It's not about it's about the paycheck and how long it lasts. Like a car is a bad investment. You buy a car, you use it, you sell it for less than you paid. What a terrible investment. Why do you do that, dummy? Because it makes my life awesome. Because it's incredible. Same thing with this part of retirement planning. What we're selling is not future value and like we're not competing with the stock market rate of return. You're saying, no, which one of these options? Comparison. Which one of these options is the money tree that delivers everything you need for your bills and lifestyle and joy and freedom? It delivers all of it on the first of the month, every month, and you spend it like a fiend, like a shopping spree, like making the golden years golden, right? A shopping spree, and on the 31st of the month, you go, oh my gosh, that was fun, and then on the 1st of the month, it shows up again. And you go, hallelujah, hallelujah. That's what we're talking about. Which does that? Which choice? Not, well, which one's got the highest upside potential, Jerry? No, it has nothing to do with that. It has nothing to do with that. The income. So this is the language we use. Now, before we wrap up, the language that I like to use in comparison, in data gathering, and in fact finding, prior to investigation, prior to reporting back, here's what you have, here's what you could have, is chunks and streams. Mm-hmm. This person, this family, if they're the right type of person, has saved money somewhere, 401k, IRA, whatever, an insurance policy, annuity, home equity, whatever. They have a chunk of money. It's already been saved, grown to something. And then they have streams monthly going out to pay for cash value life insurance, to pay for coming out of the paycheck to the 401k, going into this 15-year mortgage that's unnecessary, whatever it is. Chunks and streams, if you learn those two categories, let me look at how you're spending your money, and let me look at the money that you have saved already, accumulated, and its characteristics. Those two, Bobby, those two, you master those. It's like passing, dribbling, and shooting. Master those three. That's all. You'll be a great basketball player. Just master those three. You know what I mean? It's not easy, but it's very simple. You'll know what to work on every day, and this show and other shows and materials can help you.
Yeah. So I'll just put a nice bow on that. You hear Charlie's language. And that is the art of comparison. It's breaking things down, complex concepts, into bite-sized chunks that they can take away with them. The paychecks and the never-ending income, doesn't matter how much your nest egg grows to, does it show up every month in your bank account? That's different than I have a bajillion dollar 401k, but tax rates just went to 90% like they were in the 60s. So the change here is comparison is all about learning the language to help shed light on their scenario, not anything else. And that's the sale. It's simply education. I like to call what we do education. Charlie always says if a client can see clearly, they're going to make the right decision. So Windshield Financial, right? We help them see clearly as they go down the road. So that's the end of this one. We are going to have resources to a lot of things on targetpracticepodcast.com. By the time this is up and running, we'll have some resources. Check us out. Check out the resources we want to be valuable to you. And that's product information. That's all sorts of things. So I look forward to seeing you in the next episode. I'm Bobby Alford. He's Charlie Jewett. Take care.
Thanks so much for listening to the Target Practice Podcast. We hope you enjoyed the episode. If you have time, please subscribe to the podcast and consider rating and reviewing the show. We'd sure appreciate it. And for show notes, resources, and to connect, shoot on over to targetpracticepodcast.com. Thanks again for listening. And we'll catch you next time on the Target Practice Podcast.